All right, today's Tuesday, October 28th, 2014. It's 6 o'clock in lovely downtown Ubud, Bali. And it's time for Bitcoin Filter. Welcome, everybody. Thanks for being here.
We can make noise now.
We've got a... Everybody, you could hear a pin drop before the show started today. Everyone's on their best behavior. But we've got a very exciting show tonight. We've got some local announcements, but I'm going to save those to the end. Very exciting local announcements, but you'll have to stick around for those. We got lots of stuff in the news to talk about, including Bitcoin manipulation, price manipulation, involving MIT. We'll talk a little bit about that. The Bitcoin scene in Singapore, second only to our scene here in Ubud. There's some things going on with Bitcoin and Singapore that obviously they've followed our, and the cat's out of the bag in Singapore as well as Bali. So we're going to check in with those guys. Hi, welcome. There is a retail slap fight over NFC, which is near field communications. Apple Pay and a conglomerate of retailers are fighting publicly about the next best technology. Meanwhile, Bitcoin doesn't care. We'll talk about that. Bitcoin competition from the Federal Reserve Bank in the United States. Looks like the Fed is throwing in their hat for digital payment systems. We'll talk a little bit about that. And tonight's show is called Bitcoin Philosophy. So I'm going to facilitate a philosophical discussion towards the end. We'll close out the night with that. And so I hope you brought your philosopher's caps, and you can help me talk a little bit about the big ideas behind Bitcoin. So we'll get to that in just a moment. So let's, oh, how could I forget? We've also got Bitcoin by the numbers, the number of the week by our very own Will. Okay, so let's kick things off with price. Uh-oh, here's the price. The folks at home can't see this. Bear with me for just a second here. There we go. Okay, so we're at $359.30 US for one Bitcoin. This is down about 7% from last week. So we've got continue to have a decline. I don't know why. It's an overall trend that's been happening since about June or July. We'll take a look at that trend in a second here. But yeah, we're down a little bit. It's never as much fun when we're on the downslide. If you take a look at all Bitcoins in existence are worth a little bit less than 5 billion US dollars. Amongst the other 190 currencies around the world, we're ranked 100th in terms of market capitalization. So there are about 100 currencies that are worth more in terms of US dollars than the Bitcoin. We're right between Dominican Republic and Yemen. Yeah, Yemen. We're underneath Yemen. Yeah. Yeah, you like the number that's good? Our numbers man likes the 100. It's not 100%. All right. Next up here. On the Indonesian exchange, one Bitcoin is worth 4,300,000 Bitcoins. You can see they're doing about 50 Bitcoins a day. It's kind of a boring week, I guess, for Bitcoin transactions in Indonesia, but you can see we're still over 4 million, the psychological barrier of 4 million Indonesian rupiah for one Bitcoin. If you take a look at the Bitcoins in Indonesia versus the rest of the world, it's right on par. We're less than a percentage point from the global average. So if you're trying to buy Bitcoins elsewhere and sell them in Indonesia, you don't really have a very good arbitrage opportunity. don't know if you guys have checked out this website in the past. It's bitcoin.golightlyplus.com, developed by our very own Andrew Golightly. It's a very cool site if you're thinking about buying or selling Bitcoins in Indonesia, especially if you've got accounts on other exchanges. You can see the price on all the other exchanges. Very handy information when you're going to buy or sell. So very cool site that Andrew's put together there. I just wanted to throw this up here before I hand it over to our number of the week. This is the Bitcoin chart for essentially the last year and a half or so. You can see that we peaked up here around $1,200 in the latter part of last year, and we've been on a real downtrend. You can see this is kind of pointing downward. Follow me here. It's been a bit of a downtrend ever since that point. So we've been riding that wave. There's a little bit of a bump up here, and then we're back down below for the year. So we're down for the year. But if you take the long view, you can see that we've climbed a long way to get to this point, and this pattern has shown itself in years past. If I come back here to the price and I show you the price over the entire lifespan of Bitcoin, you can see that we had a little bump here that looked very similar. This is what the world looked like back in 2011, right? Major downtrend here. And now that's like not even newsworthy. You can see how small that gets compared to the, well, so this is the next one that happened. You can see a nice downtrend there. And of course, that pales in comparison to the one we're in now. But you can see a definite market trend there. If you come to the big chart, you can see it here. Now, the one thing I wanted to point out here is this is the moving average, right? I think it's a 30-day moving average. So you can see that we've gone below the average price of Bitcoin for all Bitcoins on sale. So we're underpriced here. Hopefully that will mean an upswing for us, but we shall see. Any questions on the price? Any comments?
Good time to buy?
It's a great time to buy. It's always a good time to buy Bitcoin.
It's kind of an interesting time now, right? Because these just in the last year, you know, we had like PayPal say we want to do it, and we see a lot of activity on the merchant side coming on. So the more merchants they come on, it's kind of counterintuitive, right? Because like you think that's good for Bitcoin, but for the price it's going to be bad for Bitcoin. Because the merchants, when they take Bitcoin, on the whole, they convert it to fiat currency because the volatility is too high. They can't risk their business and cash flow on the volatility and price change week to week. So they cash out into fiat currency, and when you do that, you dump the market for every sale and you sell it, and that's a downward pressure. So we can kind of expect that downward pressure to continue for years ahead, and it's only really going to flick up when it becomes a viable payment form for the masses, and they want to buy in. They want to buy in to put into wallets and charge up, buy that Bitcoin like we've never seen before, and charge up your wallets to pay. So it's kind of like a step backwards before 2 steps forward. That's my opinion.
Yeah.
So one article that suggests that the price of Bitcoin is driven by the cost of mining Bitcoin. Someone did some math and it showed it was exactly, they matched up. So, I mean, the price spiked, you know, when the reward was hard, and that's when the price spiked. It's interesting, there might be dynamics that happened just before and just after that. You know.
Just after the halving.
There are people talking about, oh, it's going to crash, you know, like miners will leave, and you know, there's all these people like saying it's all going to be doom and failure, just you know, as it approaches the next halving. But we've only had one halving so far, so.
Yeah, we've only got one example. So what Edmund's referring to is every 4 years, the number of Bitcoins that are awarded every 10 minutes is cut in half. So there's less incentive for miners to participate in the Bitcoin network.
Well, it just means that they won't sell their mined Bitcoin for less than it cost them. So suddenly it will cost them twice as much, and they'll be reluctant to sell at a loss. So really, that sort of forces the price to double.
Right. As it relates to the price, I mean, I'm talking about the overall reward, and the number of Bitcoins they get is in half, right? And then it's up to individual miners to decide, are they going to immediately sell their Bitcoin, or are they bullish on the rise in value, and do they keep them? That's a big question, and I think it varies from miner to miner on whether they liquidate their Bitcoins right away or they sit on them.
Well, mining's getting to a point where it's no longer a small hobby, and it's like, these are major operations. So you're paying large costs. You've got massive electricity costs. You know, the cost of mining, well, the cost of Bitcoin is really tagged to electricity, because you know that they can't sit there and hold on to their Bitcoins because they've got overheads to pay for the electricity. So eventually they have to dump. You know, it's not like they can hold on to it for months. So and we had that talk by that guest speaker. What was his name?
Max?
Max, yeah.
When I wasn't here.
And he quantified it. He quantified that value of, all right, to secure the network with mining, you know, it's transaction processing and security. It costs us something like, I can't remember the number. It was big. It was like $0.6 billion per year, and that's how much more Bitcoins are being dumped into the market each year. And that's going to, you know, 0.6 billion, if that's the right number, versus 4.7, 5 billion market cap. There's a huge amount of inflation going into it and pushing the market down.
Well, the amount of electricity costs for the average miner wouldn't be changing that significantly. They're still going to be sort of...
The electricity cost stays the same, but the amount of Bitcoin they get out is
It's cut in half.
less. It's cut in half. And then in 2016 is the next jump, right? They're going to get half again. So
if you measure it in Bitcoin, yeah. So if you measure it in dollars, it's about the same.
Well, you're getting half the reward, and you've got the same costs in fiat. The same costs in fiat for half a reward in
Well, it's not
Bitcoin.
half a reward. It depends on your point of reference. If reward halves, then the price of Bitcoin doubles, and therefore the actual reward is...
No, the price of Bitcoin does not double.
Yes, it does.
No, you're mistaken.
Well,
The price of Bitcoin stays the same. They get half as many Bitcoin every 10 minutes, and the price of Bitcoin remains the same.
Well, you won't see that doubling immediately. It's not like you'll see suddenly, like 1 minute, this price. The market has to adjust. But if you look at the way the price changed around the last halving, December 2012, it's quite a significant one.
it has an influence.
Shortly afterwards, yeah.
It has an influence.
Over time.
Yeah.
Yeah.
It's a conversation between miners' activity and market activities.
Well, and I've looked at some analysis where lots of miners are counting on the rise in value of Bitcoin to make their operations viable. And given that we've seen this downtrend for the last year, there's probably a lot of miners that are hurting. You know, maybe they're paying their electricity out of their savings in anticipation of Bitcoin going up in value, and maybe they're in the process of dumping their Bitcoins. That would also cause a downward pressure on the price.
But if they're mining at a loss, then wouldn't it be better for them to not mine and just buy them instead of buying the price?
Yeah, have you ever talked to a miner? They're not rational. They're exuberant.
So they not use solar power or wind power?
Well,
they shut down their mining. They cease to pay electricity, and then the difficulty rate adjusts.
Maybe most miners aren't paying for their electricity. Maybe they're just like renting.
They're doing it at the office at night. They're flipping a switch.
They're electricity pirates.
No doubt. Bitcoin mining is finding the cheapest source of electricity all over the world. Yes, if you believe in perfect market dynamics.
You see they're making Bitcoin heaters now?
Bitcoin heaters.
Yeah, you just plug it in and it heats your house, and you're subsidizing your heating by making that Bitcoin.
Yeah. Makes perfect sense. Okay, let's not linger too long on the price. We've got lots to cover tonight. Take it away, Will, with Bitcoin number of the week.
All right. Okay, here we go. And the number of the week is 3.3. Any guesses on that?
I'm just happy to see something that has fewer than
Yeah. It was actually going to be 3.33.
3.
But it's changed a little.
3.14.
And 3.33 is kind of like some religious something about the universe and God. Yeah, John 3:33. Okay, no guesses. So I'm going to cover Bitcoin volatility. Oh, it's dropped down. It went to 3.4 just earlier. So this is well, Bitcoin gets bashed a lot because the price moves so quickly and we can't really use it too well as a currency because there's no stability. So I thought I'd take a look at the volatility this week. I'm pretty curious about where it's going. We all say it's going to go down, which is true. Like this graph Gary usually brings up every week. And you can look at the all-time trend. This is the volatility measured in some index. I think they say it's 30-day volatility index, but I can't make sense of exactly what they're doing because we'll cover that soon. But that is the trend line over all the time, and it is dropping. It is dropping. I mean that. Yeah, I can't read it.
Really, how does that compare to US dollar or euro dollar?
Yeah, exactly. That's what I wanted to do. So, yeah. No,
Rick's a
that's
plant.
good. That's good. Thanks, Rick.
Funny you should ask that.
Let me answer this for you. Let me just pull it up right now on the fly. So before, yeah.
How's the orange line compared to the blue line? It doesn't seem to have any sort of correlation.
Oh, going back. The what?
The orange line doesn't seem to have any bearing on the blue line.
Well, it's sort of, I think it's regression analysis. So they take all of that and they get it down to a trend line, which is a straight line from, if you did an average of those values and then forced a straight line onto it, it would look like that. So it's curve matching. These things are they look like lines, but a whole bunch of dots at every time point. And then if you were to draw a line that aggregates takes into account all those dots into a straight line, that's where it would hit. Do that a lot in science as well, and you're doing it in physics class.
Surely the orange line should go up when you got the blue peaks, though.
No, it's not a rolling average. It's the average of the whole thing.
It's a regression analysis. It's like, what is the trend and what is the straight line trend? So it can't move. It's got to be a straight line if it's a trend, right? So it's curve matching, and the curve we're matching is that of a linear straight line. So this straight line describes that noise the best if it was a straight line.
Surely the orange line would have to start off at 0 and finish at whatever the average is now. I mean, how do you start defining the first point of the orange line? You can't divide by 0 infinity for the first.
Have you ever seen those scatter plots? And you're like, here's a whole bunch of scatters, and it's like, right? And then go put a line in between of it, and you're basically looking for the equidistance all the time, and then you get the slope. So
Maybe click on the 1 month, 3 month, 6 month to show how it
does change. Yeah, it does change. But I want to move on because we don't want to clip the philosophy subject that we're going on. I'm quite interested to hear about that too. So I thought I'd go into like, what is volatility? Volatility is measured by a statistical method called standard deviation. So when we talk about volatility, we're talking about like when we look at something like this. If you zoomed in and zoomed in and zoomed in, I'm going to go to the 3-minute zone. Each one of these are trades. They're like trades setting the price point. And they are just the point in which a trade happened. So you're going to take all of these points that were taken over time, and you're looking at how much spread, variation, and you want to get to a point where you go between if you look at all the scatter points, 68% of it would fall, or 68% of those points would fall within one standard deviation.
So above or below the average.
Yeah, above or below the average. And then you, how does it work? So, how did it go?
Basically, you've got the average, right? And then you take the average distance from the average. Any point can be a certain distance from the average.
Okay, that's right. So when we go back to this 3.3%, it's saying that the price right now, plus or minus 3.3% over the last 30 days, 68% of those price points were within that 3.3 zone. Is that 3.3% zone? Does that make sense?
Yeah.
Yeah.
That makes sense.
Okay, good. All right. So that's important going on. So we're doing a that figure here, which most people measure in, is the 30-day volatility. The 30-day volatility is taking 30 days of those points, and this is the actual 30-day volatility over the last since 2010, and you can see how it varies from early days. It was always consistently above 5%, below 15%, and now we're starting to get it trending down to usually below 5%. So there's a big downward shift in volatility, and again, I didn't understand why it didn't match this, because this is meant to be 30-day volatility, and I think there's something in this that I'm not understanding there.
Isn't the bigger market now in Chinese?
What's that?
Isn't the Chinese the bigger market now?
Yeah, but this should be all taking into account all markets, I believe. Maybe not. Maybe that would explain it. Maybe they're looking at particular markets, but no, that can't be right, because they all track each other. Anyway, moving on. So let's compare this to gold. And I have the figure for gold. The gold figure is a 1.2% volatility instead of 3.3. And remember, the market cap, we covered this just earlier, was $7.4 billion of that. The total market size of Bitcoin is about roughly $5 billion. And if you look at gold, this is the gold value, but also the gold market cap on the left here. The blue line is how much, if you sold all of your gold in existence, that's been mined into existence, you can see how much it's worth. And it peaked at 9,000 billion, so 9 trillion. And currently it's at 7.5 thousand billion, right? So we're talking about a volatility similar to Bitcoin. It's kind of 3 times less at 1,000 and something times higher market size. So that tells me the volatility of Bitcoin has a lot of promise to be very stable. And here's another graph.
That's a whole other discussion.
Yeah, it's manipulated, and
Bitcoin isn't?
all markets are manipulated. It's interesting. It's really interesting. Is that when I used to trade derivatives, one of the things we knew was that the foreign exchange markets are so big because they're measured in lots of trillions of dollars that no one party can manipulate it very well.
That was the orthodox view?
Yeah. No, there's some truth to it. You can manipulate a smaller market cap much more easily. Sure. So there's a trend again. So here's an interesting one. This is the volatility of Bitcoin versus the euro versus the S&P 500. So Bitcoin moving all over the place. These numbers are different. And I think they're saying annualized return volatility. There's a process they're annualizing it. Whether or not they're taking into account the volatility over the year. It's got 30-day in it. So what but let's just take their comparison. And I'll pull up this S&P 500 right? Pretty volatile stock market. And S&P 500 is $5,140 billion of market cap. So 1,000 times bigger than Bitcoin. But the volatility graphs here look, Bitcoin's higher, but not that much higher.
Well, it's also years old.
What's that?
The most recent data there is a year old, more than a year old.
Very true, very true.
And volatility has increased significantly in the last couple of quarters.
That's right. Let's go
Do you have
back.
one for this year?
Yeah, that is this one. Here we go. This is the latest one, right? So that graph went up to here, and the graph, it's still moving a bit. Let's go back to that graph. So it's up around. It is still higher. It's up around there.
So if you had your money in an index fund for the S&P 500, you'd still be subject to the same volatility.
Yeah, and everyone's putting their retirement funds into there, right? So, and then let's look at the euro. Market cap. Well, we call that total money in existence. M3 money supply. If I measure that in US dollars, it's 12,800 billion US dollars. And the US is roughly the same. So we're measuring two big beasts against each other, and that's the kind of volatility we're getting. Notice it's not zero, right? So just quickly, I thought, because I come from New Zealand, it's a really small country. M3 money supply is $272 billion. Measured in US dollars, that's something like 220 billion, roughly. It's like 4 Bill Gates put together is New Zealand. And
So when he visits, then you're like the net worth of the country gets a fifth larger.
Yeah. I mean, it's a huge amount of impact these people can have with the kind of money they have, So just going to the volatility calculator for, go in for 4 weeks, calculate, which is roughly for 30-day moving sort of average volatility. You can get figures here. New Zealand US dollars, 1.45% volatility. Remember, we're looking at 3.3 currently for Bitcoin, right? So the New Zealand dollar is subject to fluctuations similar to Bitcoin currently.
Against
half,
other currencies,
it's half of Bitcoin. 3.3 points, 1.5, right? So,
right, and we've seen fluctuations between the dollar and the rupiah of plus or minus 30%. If you look at a 2-year graph, anywhere from 30% above or below the dollar.
What's the volatility index for that? Rupiah
Probably pretty high.
it's not on this. Like, can we find it? It's not on here. It's not one of the major currencies. It's like New Zealand's one of the highest because we're a small, tiny rowboat in a big ocean. It is the highest on
So
this.
presumably it would be higher.
Yeah,
It's kind of related to size.
I think so.
Indonesia is big. It's a big country, 250 million people.
Yeah, but I don't think the market cap of Rupiah is that much off from New Zealand.
Really?
Somebody Google.
M3 money supply Indonesia. Just do that. I'm just going to move it along. But one thing that just came to me is that Bitcoin volatility will never be zero, because the equivalent here is Bitcoin is like foreign currency. No matter what country you're spending in, there's going to be a ratio between Bitcoin, no matter how stable Bitcoin is, versus the currency you're in. So if we're in Indonesia and Bitcoin is like stable at its end game, you're subject to the volatility of the fiat currency of Indonesian rupiah. Ditto for US dollar. So it will never be zero, and I think people are always going to complain about that. But we're dealing with a global currency here, and it'll only be zero when we're Bitcoin native. We're buying in Bitcoin, selling in Bitcoin, earning in Bitcoin.
But this, I assume volatility is directly correlated with the price, right? Because, obviously the volatility percentage might be comparable, but in terms of like actual dollar for dollar value, is that a bigger difference in Bitcoin?
It depends on what you're comparing it to. I mean, volatility is only relevant in comparison with another currency.
Yeah, when you talk about volatility in dollars and cents, that would be true. But what we're measuring is a percentage change between the two. So that we're talking 1.5% change within 30 days. 68% of that change would be within there. And so yeah, that just sort of comes out in the wash. And I just put this all into a table so we can see. Today, the 30-day volatility is 3.3%. That's kind of a false figure because you can see that it swings wildly. It swings. Maybe we should be looking at a 365-day volatility, but no one really sort of measures that as a standard. New Zealand dollar, half of that. S&P 500. These are the 4.7. Gold 1.2. Euro 0.7. Euro is probably the biggest currency. This is about as stable as foreign exchange can get, and we're talking 12,000 billion. So 12 trillion versus against another beast, the US dollar, are roughly the same amount. That's as stable as you're going to get it. And this is how many times bigger these guys are than Bitcoin, right? So it's promising. I'm just saying it's promising. It's promising. That's
So we should be surprised it's not more volatile considering it's such a small market.
Yeah. And that made me think about right now Wall Street's getting in on this game. So like maybe it's been stable because it's small players. But when we get the whales coming in, the really big guys saying Bitcoin's going to take off, and we're talking about market manipulations here. Maybe it'll get more volatile as the big guys come into it.
There's also something happening at the moment. I got a message from someone trying to get me to buy utopia, which is some apparently big in Asia. I don't know if you've heard of them. But there's a lot of organisations now trying to create things that are very Bitcoin-like, thinking that they can try and cash in on the Bitcoin hype. A lot of people don't know what the differences are. So this is something that's not even decentralised. It's multi-level marketing. It's completely different to Bitcoin. It's actually worse than the current financial system. But because it's digital and it's cryptocurrency, people just so there's a lot of market dilution happening at the moment because there's a lot of people perhaps intentionally misleading people. Maybe to try and muddy the waters and sort of divert attention away from Bitcoin. So that's sort of good. I think eventually that will settle down when people realise, as people's understanding matures, that will settle down, and then Bitcoin prices start going up when people realise that it's not the same as the others.
Yeah,
It'll take time.
Yeah, I think that there's a wave of people that somebody somewhere is learning about Bitcoin for the first time today, right? And then there's people in this room that have been involved for years and years. And the whole world is trying to figure out what Bitcoin is and what role it plays. And until they do, it's going to be volatile versus the other things that we understand. The one thing I like to mention when we talk about volatility is Bitcoin can be very volatile in terms of price, but it's not volatile at all in terms of supply. And that's a very interesting point. When we are Bitcoin native, when we begin to compare with other currencies, and there's a large volatility versus other currencies, it will be a commentary on the monetary policy for each country's currency. And Bitcoin could be the ballast, the measuring stick, because we do know the supply. It's the first currency we ever had where we always knew exactly the supply at every given moment. And every other currency that we use, we don't know those figures. So anyway, we will see. I like the trend line though. The upshot is volatility is going down, right?
It's going down.
Cool.
And it's going down, and it's way smaller than
on a much smaller market.
Yeah.
Cool.
I hope you're right, man.
Yes, we know where Will lives, or at least where he is on Tuesday nights. So, well, speaking of market manipulation, let's get right into the news. Just for those of you who aren't familiar, we get together online at Bitcoins in Bali, and people post stories all week long, and then when we get together in person, we talk about it. This is a news item that I think was brought to our attention by Teddy, who always attends virtually. I think he's somewhere in Java. But in any case, MIT computer scientists can predict the price of Bitcoin. Obviously, the people at MIT are very smart. They use math to identify trends and statistical analysis and basically the stuff of high-frequency trading. They've done it. I'll just read this to you. Specifically, every 2 seconds, they predicted the average price movement over the following 10 seconds. If the price movement was higher than a certain threshold, they bought Bitcoin. If it was lower than the opposite threshold, they sold one. And they made an 89% return in 50 days.
Wow.
So you can imagine there's a lot of people doing this with the market. So when things go up, when things go down, it's programmable money. All of these exchanges have APIs, which means a computer can talk to the exchange and trade based on a set of rules. You can bet there's lots of people making lots of money pushing the market around because this is a very simple algorithm they defined here, but there's probably sophisticated trading robots that are on a thin volume, which means there's not very many people on the market at a particular time, means that they can push the price around with less money. So they can create a trend that maybe can create a mini panic, which they can then buy into and then sell later when they create the reverse trend going up. And you can program an algorithm to make those decisions and make money, and that's undoubtedly happening. So whenever we talk about price, consider that we're also competing with the logic of a million computers out there trying to predict the same things.
So they have this button on Wall Street they push, and that shuts down the exchange because so much of trading is electronic now. And there's this property boom in Wall Street because if you can locate your computers closer to the exchange, it gets down the response time by a few milliseconds or microseconds, and it gives you an advantage over the other algorithms. So like price right next to the exchange is premium because of that. And because the frequency of trading is so quick, and sometimes it gets out of hand because some of them trade on momentum. It's going up, they jump on it, and they add to it. It's known to crash an exchange. So they have this button in Wall Street, and they hit it when it's crashing because it resets all the computers. They stop.
Right, they essentially close the exchange, right?
They close the exchange.
They stopped doing that. They put speed bumps so everyone comes out the same.
Well, but they do close the exchange, though.
No, I mean that manifestation of that basically literally not a millisecond, even less than that. It doesn't apply anymore because now they have set it so everyone is on the supposedly same thing.
Yeah.
People were,
When did they do that? Was that recent?
last few years.
This
Now around all the traffic you're in
well, and this was
literally downtown Wall Street. The basements were basically more
Hey,
high
guys,
value
welcome.
than the offices space because they wanted to get closer. It became insane. It stopped doing that.
Right. So there's no longer supposedly there's no longer any advantage to being closer to the floor, but they still
That's why they had that crash. They didn't know what had happened.
Right. Well, the crash that happened was because of high frequency trading, and it's still possible because you've got thousands of these computers making decisions on, well, nobody really knows exactly how they make their decisions, nor what the combination of all those algorithms are. So what's interesting is you can pull the plug on Wall Street, cut out all trading, stop trading for the weekend, right, and let people cool their jets, or maybe they reprogram their algorithm, but you can't do that with Bitcoin. Bitcoin is 24/7. You create a panic, and I've seen it. I've seen panic, well, what do you call a panic on the way up? Like exuberance. I've seen that right after the U.S. Senate hearings, like watching it during the day just go up, 20%. And then you see the same kind of selling panic. It's a psychological phenomenon. And that's why the stock exchange reserves the right to pull the plug, but you can't really pull the plug on Bitcoin, which is probably makes it more subject to the stampede effect.
When that happens with Bitcoin, people are going to Bitcoin exchanges.
Yes.
So doesn't that overload and makes it more drastic because then you have the dominant exchanges all of a sudden are either over, just can't handle it, and falls to the other exchange, so it makes it more dramatic.
Possibly. I mean, the different
It's not-
exchanges.
I'm not going to call you up and say, I want to get out of Bitcoin, you're going to buy it?
No. Right. Well, or it's a bunch of computers making that decision, and a bunch of computers kind of get in a vicious spiral where they're selling until the last buyer is like, somebody actually sitting at their machine because all the algorithms have had it. But anyway, yeah, I'll buy one.
But it could be a bigger problem in the future. Now maybe it's not super many that's doing this, but if Bitcoin gets a wide adoption, then probably the volumes of this is going to increase a lot, and especially if Wall Street are going to get into this.
Yeah.
If one of the things is balanced with market cap. So if it was foreign exchange being in the tens of trillions of dollars, it's such a big beast that high frequency trading doesn't tend to. It's a smaller influence against such a big ocean. But there's also the service that it allows. The more of this sort of computerized trading, the more liquidity you get in the market, and that's a really important feature of the currency. Because if a merchant makes a sale, got Bitcoin and wants to turn it into, say, rupee and US dollars, they need to put that Bitcoin on the market, and it's no use if you've got to wait 5 hours for the next person to take a trade. You want an instant trade right now at a given market price, and it's fluid. So those APIs, computer algorithms, they add liquidity.
It's a double-edged sword, right?
It's important.
Yeah, it's the nature of the beast. And Marcus, I would just comment that I think Wall Street is already there, or at least maybe that's their Wall Streeters doing it on the weekend. You can bet that all those rocket scientists that create, Wall Street hires rocket scientists quite literally to do the math on all these high frequency trading algorithms. And there's probably more money to be made in Bitcoin than on the established markets because it's such a small market. It can be pushed around, and you could take your personal fortune and put an algorithm behind it and probably do all right. These guys did all right. These MIT guys,
Did they say how much money they put in, or they don't even know?
I can't remember.
I have a question to ask.
Sure.
What about, don't you think that the fundamentals of the Bitcoin economy is held by a certain number of people who truly believe in the value of Bitcoin? And unlike any other currency where it's really traded for quick return and money, I mean, ultimately you're not going to get a sell-off of everyone's going to sell it.
Right. That's a good point. There is a foundation of people that would not sell their Bitcoin at any price, especially if there was a run on Bitcoin, which means that there's something less than all Bitcoins for sale at any one time. In fact, I don't know, there's probably only maybe 10 or 15% of all Bitcoins on sale at any one time. And if, even though the market cap is $5 billion, Bill Gates could show up with $5 billion. He could not buy all Bitcoins for that price because that would drive the price up. There is an ideological, philosophical foundation to Bitcoin that would keep, it would hold it to a certain amount, but that also makes it easier to manipulate in that cream on the top.
Yeah.
So.
You think that could work, really?
What's that?
A buffer? Would there be a buffer?
A buffer? You mean like a kill switch, like let's cool our jets for Bitcoin?
It won't get down to a certain level, I wonder if you could do a calculation of that. And based on whoever's bought Bitcoin in initial years and all that, you're not going to sell it off, you know what I mean? You were the first bunch of guys who buy it, the first 1,000, 2,000 guys buy it. We had so much capitalization based on that. These guys are going to be the ones that are going to hold it to.
Yeah, I don't know. It's like I covered last week the top ceiling of what with the scenario, and I guess we'd need to make up in a scenario of what's the worst case, and I can't think of what that would be in ways you could calculate it, because there's always a use for Bitcoin. You know, whenever some country goes bankrupt, currency crises, people are going to stick it in something that is easy to hold value in. And so, you know, Bitcoin took a jump when
Cyprus.
It was Cyprus, yeah. So you know, we don't know. Well, maybe a rocket scientist could come up with a standardized scenario and come up with that figure. But yeah.
Yeah. In the meantime, just fasten your seatbelt. I think it's going to be a wild ride, but it's fun. It's interesting. It's not dull, as we like to say. Okay, let's move on here. You guys recognize this guy? Stephen DeMoliner was recognized as an expert. He's local. He's usually at this meeting, actually. So I just wanted to acknowledge that he was recognized as an expert by Cointelegraph. He's been in alternative currencies for years and years and years. Way before Bitcoin arrived, he was involved in the alternative currency movement and recognized as an expert there. So I just thought it was cool that he made the news. Local boy does good.
He does have more hair than that.
Yeah. Did they airbrush this
It
in?
looks much better looking.
Yeah. I would have.
So
Yeah.
Gary, what did he actually get recognized for?
I think this
on
is.
the Cointelegraph sort of advisory panel. They get together, they ask questions and solicit comments from.
Yeah. It's really interesting how many philosophy and political science majors end up talking about money. It's not uncommon. Too bad Steven's not here. We could pick on him in person, but maybe he's watching at home. Oh, he is. So, get better, Steven. All right. Also from Cointelegraph, I think Rick, you posted this one, and this is what I was making fun of earlier about them following Bali's lead. But apparently Singapore, I mean, it's already a financial hub, but they're really kind of being recognized as a Bitcoin hub. The last time I went to Singapore, I visited a Bitcoin ATM. So I went to Singapore with my Bitcoin and got money out of the ATM that I could spend while I was there. I had dinner at a restaurant where I paid with Bitcoin, and there's lots of things going on, including the foundation for this story, which is this guy, Adam Draper, who is a quite well-known venture capitalist out of Silicon Valley. His first Bitcoin company in Southeast Asia was one in Singapore. It's called this, what is it? Is it CoinHawk or CoinHawko? Anyway, just interesting that things are happening in this part of the world, and this is a bit of local news, even though it's up in Singapore. You know, we're carrying our weight, or this part of the world, there are things happening, very interesting things happening. And next time you go to Singapore, check it out. There's a vibrant community there. Lots of people to connect with when you do your next visa run. Okay, here's another one. This is what I was referring to about the slap fight between a conglomerate of retailers and Apple Pay. So what these retailers are doing, they've got this application called Currency. They're spelling it Currency. Isn't that clever? Trademark, can't have that. Don't try and use that clever name they've got there. It's trademarked. So anyway, what they're doing is, because Apple Pay uses near field communication, which is where you kind of just wave your phone near the terminal and it communicates. And so the idea with Apple Pay is you can just swipe your phone and pay, and you're off you go. You don't have to worry about anything. And these guys at Rite Aid and CVS and a bunch of other, Dunkin' Donuts, I think, they've got this Currency initiative. And to combat Apple Pay, they're disabling their near field communication terminals. So this is capitalism at its best, when corporations do things to spite one another, and the last people to win are the actual consumers.
Currency is an app on iPhone, but you pay.
Yeah, Currency. Yeah, Currency is an app. Actually, and Apple Pay is a whole system with their phone, and it's all a way for them to get in the middle of your payment and take a little slice. And
Disabling NFC on POS, and that's a different piece of hardware. That's not currency.
Right, current C is using something besides NFC, but Apple Pay is using NFC, so they're making it, presumably some consumer's going to know and care and say, I'm going to choose current C versus Apple Pay because I want to go to Rite Aid and use my phone to pay.
So
I mean, it's really quite ridiculous, actually.
what's the disabling? Who's disabling?
Pull something out.
These retailers, currency partners, Gap, Old Navy, 7-Eleven, Kohl's, they're going and pulling the plug on their NFC devices so that you can't use your Apple Pay to connect to the MasterCard, Visa MasterCard
They
system.
may lose customers from doing that as well.
Yeah, it's really quite just, yeah. Yeah, it's I think it's just humorous, but anyway, it's interesting when this is why, in my opinion, this is why Bitcoin has an edge, because it's not a company competing with anybody. I mean, it just does what it does. It works the way it works, and there's nobody. It's using standard technology that the internet and a phone and the camera on your phone, and nobody, unless you want to turn off the internet, you're not going to be able to play games like that, which is the internet. Yeah, there's a kill switch, right? Doesn't Obama have that? I thought he had the internet kill switch. Anyway.
It's like the Nietzsche on here at the
yeah. This is one. I'll just do this quickly because we're starting to get low on time. This is the Fed is also getting into the game of payments. It's really, I don't know if it's just because I pay attention, but it seems like the world is going nuts for payments, right? You got Apple Pay, you got this currency, Bitcoin came along, and now the Federal Reserve is saying that they want to modernize the payment network and make clearing transactions more quickly. The reason this hasn't happened to date is because banks make money when things take 2 or 3 days to clear, but now they've got competition, so maybe they're getting involved now. But what was the thing I wanted to read to you here? Anyway, they're creating like all kinds of task forces, and maybe they'll name like a payments czar or something like that. It's all quite there's a lot of bureaucracy. Somehow I don't think that this will be relevant when they actually do implement it, but it's funny that they're...
Let's name our own payments czar. Let's just be in the
yeah, good idea. Next story. I don't know if you took a look at this. This is one that Olivier posted. The IRS, when you deposit money in your bank account and it's greater than $10,000, banks are required to submit a report to the IRS. So a lot of people just do their deposits in amounts less than $10,000 so that they don't have to deal with that. And also the banks have a lot less paperwork to do when people do that. So it turns out that the IRS is now going around to business owners, and if there's a pattern of them making deposits to their bank account just below $10,000, then they are confiscating their funds until seizing their bank account. In this case, this woman who runs a diner had $33,000 in her account, and the IRS seized it.
That's the smallest one.
This is really old news. I mean, I practiced criminal defense law for a number of years, decades ago, and asset forfeiture and seizure was an extremely aggressive weapon used by federal law enforcement for ages.
Mm-hmm.
This is just the newest flavor of the old thing.
Right.
But it's getting more.
Yeah.
It's getting more and more common.
There's money to be made. I mean, there are law enforcement agencies that are profit centers simply because of their asset seizure and asset forfeiture exercise.
Yeah.
So they're basically subsidizing their budgets.
They were more than
seizing.
subsidizing.
Yeah, it's ridiculous.
Yeah,
$25,000 seized, not Bank of America.
Yeah.
Well, as criminal defense lawyers, we wound up taking payment in cars and houses because all our clients' assets have been seized.
All their liquid assets were.
Have been seized. Yeah, we all had really nice cars.
Yeah, well, it's an amazing story. It's a really good read. I recommend it. There's a personal factor. I actually love when things like this make it into the Bitcoins and Bali group because it doesn't really mention Bitcoin. It just talks about the dynamics that drive Bitcoin adoption. This is not possible with with Bitcoin or other cryptocurrencies, the government cannot seize your funds, it cannot garnish you your wages unless they have your private key, which if you're conscious about how you use Bitcoin, then you're keeping track of your own private keys, and it's not possible for them to do that. They could threaten you and they could send you letters, but they can't and then ask you to prove that you're innocent, which is really what happens now, is that they come and take the funds, and then it's up to you to hire a lawyer, apparently pay them with cars and things, and then
very rarely, and oftentimes it was a deal that was done for a percentage of the original value. And they could extend it by saying, oh, well, you commingled the funds with legitimate sources of income, thereby tainting the legitimate income, that we can seize it all.
Yeah,
They just seize your assets first.
Oh yeah.
They would do it because it would be a way to put pressure on you. You couldn't retain counsel. You couldn't conduct independent investigation. You didn't have any assets. Yeah, it was an
They took
effective tool.
one family got $500,000, $447,000.
Yeah, it's really sad. I mean, that's
Seriously screwed up.
Ruined their family business.
Yeah, civil asset forfeiture format. There it is.
and what
2,000. That's not like
Yeah, it's not.
it is on the uptick, like Olivia mentioned. I think in 2005 there were 150 cases, and last year there were 600 something, 650.
It's a profit center.
Yeah, so it's going in one direction, and it's not good.
Yeah, basically, if you're an American, you do not have an account, a
Go to
bank
the-
account that's also connected to it. You have a foreign bank account, anything, they find an excuse.
Yeah, there's
Your assets.
no due process there. They just take it, and then it's up to you to sort out the pieces. And I'm really glad that this is in the New York Times, because you see this kind of thing published in a lot of, well, more fringy kind of websites, and this reporter does a really good job of getting to the heart of the matter, and it's the New York Times, so maybe yeah, you can forward this to your friends and family, and they won't think you're as fringy as maybe they maybe I'm talking about my situation too much. Okay, so anyway, all right, BitCon. We were talking about people. I think Edmund, you mentioned like that there's people getting in the game of defrauding people of things with new coins and new tokens.
Yeah.
And this right, and this guy Jeffrey Robinson is like this big. He wrote this thing, BitCon, the naked truth about Bitcoin, and really he actually praises the blockchain technology and says it might be good for smart contracts and asset management, but it's going to end in tears because what he calls it a pump and dump scheme.
This whole PR campaign is a pump and dump scheme.
Yeah. It's I mean, it's a lot of ad hominem attacks, not really anything substantive here. Yeah, well, he wrote the book on anti-money laundering, so he's getting a good audience. But this is from Fortune, also a mainstream media outlet, and the reporter does a good job of kind of calling him to task. I think he kind of makes an idiot of himself with his argument. Thanks to the reporter asking good questions. It's a good format for the article, but you can check that out for yourself. Pretty good. Yep. The links will be in the show notes. Now, this guy was talking about potential fraud. There was actual fraud at moolah.io. There's an excellent recap at Let's Talk Bitcoin. This happened with Dogecoin, not with Bitcoin. Essentially, a serial fraudster showed up in the Dogecoin community and ripped them off for tens of thousands, if not hundreds of thousands of dollars. And the whole story is here. What makes it interesting is that there were people kind of screaming like, this guy is a fraud, there's something fishy going on here. And like any whistleblower, they were ostracized. In fact, the guy that blew the whistle, they interview him on this show, he was banned from Reddit because he was complaining about this guy, and they thought that it was like something personal, and they banned the guy from Reddit for, obviously he's been reinstated since because this guy has disappeared with everybody's money.
But who is this guy? He ran Moolah?
Yeah, he ran moolah.io. It was an exchange. It's really sad to see all of these exchanges going under, because really you know, you kind of have to trust exchanges when you've got money coming and going. I mean, you really have no choice but to keep your money in exchange if you want real-time liquidity for your business.
Well, if there's no
And-
regulation, why would anyone not run an exchange to take money?
Well, I mean,
Actually, there are two pieces of regulation news today that I just managed to find and post on Bitcoins in Bali just a moment ago, which relate to that.
yeah.
So we can get to that at the end.
Okay. Okay. All right. We are on the hour, so let's move. Let's just take a few minutes to talk about Bitcoin philosophy, because I think it's wrapped up in all of the stories we've been talking about tonight. If you guys go back, it's actually quite interesting. It's the birthday of the Satoshi Nakamoto paper, October 31st, 2008. This is when he first wrote the idea of Bitcoin is 6 years old, almost to the day. On the 31st, it'll be a 6-year-old idea. Of course, I think in January or February of 2009 is when Bitcoin started, and the rest is history. But it's interesting to think about you know, what has changed since he wrote this paper, and how have things changed philosophically? What was his original philosophy, and how has it stayed true or not true to that? I think it's interesting to think about the whole thing philosophically. Of course, what happened in 2008, the global financial crisis? Bitcoin was born out of the global financial crisis. Why? Because of all the shenanigans played by central banks. You can see it seems like they were good actors until here's where the crisis hit. We've been printing money ever since. Another interesting thing, I've been showing you that graph for months, but here is the effective federal funds rate. This is what the Fed loans out money to the primary dealer banks at a certain percentage, and all other interest rates are based on that. So the interest rate you get when you borrow money for your home is based on this rate, and it's been near zero at the same time. So we've been printing money. That's one lever that the Federal Reserve has, and we've got interest rates near zero. This is all designed to bring the economy back to life. That hasn't happened, and they're talking about you know, ending this program where they're doing all this money printing. But as soon as they do, it's going to wreak havoc on the economy. Every time they even hint at doing this, the stock market crashes. And actually, we're in a bit of a pullback right now in the U.S. stock market. So it's because of banking shenanigans that Bitcoin was born. Really, Bitcoin, we talk about it, the price of it, and we talk about it as a payment mechanism, but it's really an entire monetary system, right? It's a trustless system, so that we don't have to trust central bankers to manage the interest rates or manage the money supply, right? It's based on an algorithm, on math and not men, people like to say. And so that's a philosophy, right? The philosophy that that you're trusting the computer program to enforce the monetary policy, and it's not some guy deciding that we need to quadruple the money supply in 4 years. So that's a philosophical tenet, I would say, of Bitcoin. Have we remained true to it? I'm not sure. There's a very small number of people that really control the commits that happen to the Bitcoin protocol. Now, all of those commits have to be adopted by the entire Bitcoin network. So there is that check and balance in the system. But some would say that you've still got people, like a concentrated group of people that can make decisions about the direction of Bitcoin and can thus be co-opted. So 5 years later, we're still, I don't know, Edmund, you've committed some things to the Bitcoin protocol, right? Who approves things when you have a code that is eligible for commitment? Does it go before a board, or how does that work?
There's about 6 core developers. Gavin, Peter, Luke, Matt. I can't remember all 6 of them. But when you watched the video last week, a lot of them were shown, like Gregory Maxwell. A lot of their photos were shown.
Right. And so it's like 6 people could make a decision that.
Jeff Darcy.
Yeah. can make a decision that the next version of the reference implementation for Bitcoin could have this feature or that feature. We posted something last week about Gavin trying to change the block size, right? And that's a commit he could make, but he's predicting that half the people will go for it and half the people won't. So is it is it totally based on math? I don't know. We've got people involved. The other thing is the core philosophical tenet is that it's decentralized. If you go back to this paper, he talks about He talks about CPU power. Nobody is mining with CPUs anymore, right? It's CPU, one vote. He's thinking that everyone is going to flip on their computer and be participating in the Bitcoin network. But that hasn't been true. We've seen a vast centralization. So Bitcoin, the tenet of it is to be decentralized, but we've seen a vast centralization in the Bitcoin mining, which is the computers that clear every transaction. When I send money to you, Davey, it goes to some miner, and he decides if it's good or not, right? Well, let's say that he doesn't like Davey or he doesn't like Gary, and he's got control of more than half the network.
It's like a cyber bank.
Yeah. Well, I mean, it's funny how lots of things within Bitcoin revert back to the old way of doing things. You've got modern, the modern companies that offer Bitcoin services. A lot of them keep your keys, right? So if the government shows up and says we want to confiscate so-and-so's Bitcoins, just like happened in that, or in the New York Times story, they could do it. It's just they've gotten involved with Bitcoin, and then they've turned around and given away the power that Bitcoin affords them. They're not keeping true, what I would say, to the philosophical tenet of decentralization, right? They're centralizing things. Bitcoin's also based on consensus. That's another thing that the blockchain itself is designed for trustless consensus, right? So anybody can participate in the Bitcoin network, but the system can be trusted to keep track of who owes who what. Of course, the Bitcoin network is thousands and thousands of computers all over the world. Every 10 minutes, they reach a consensus on who owes who what. And that's really the fundamental invention of Bitcoin, was allowing computers to do that. And that's a fundamental tenet that I think Bitcoin is still keeping true to. But those are the four things: the trustless nature of Bitcoin, the decentralization aspect of it, the fact that it's based on math and not men, and that the overall system is based on consensus and not hierarchical authority. And can anybody think of any other pieces of Bitcoin philosophy that
Definitely peer-to-peer.
peer-to-peer? Yeah. Well, that's another thing that when I talked about the miners, you have to go through a miner in order to complete a Bitcoin transaction. When it was one CPU, one vote, and it was much more peer-to-peer than it is today. So we're losing a bit of that.
How many miners are there in total?
I don't know exactly, but it's
The question is, how many nodes are there, or how many miners are there? Because if you look at nodes, it's one thing, but how many miners would tell us average nodes per miner.
Yeah. Well, I do know the trend, and the trend is down. There's a smaller number of nodes, and there's a smaller number of people mining, which means that more and more power is in the hands of fewer and fewer people or organizations, and that's how things can be co-opted. So it's it remains to be seen. But interestingly enough, a lot of the altcoins, I don't know if everyone's familiar or not, but there are hundreds, if not thousands now, of Bitcoin competitors which claim to solve this problem or that problem that they think Bitcoin has, and and this CPU problem or this consolidation of mining problem is just one of those things. And if Bitcoin becomes co-opted, then one of these other altcoins will take the mantle, one that solves the problem that brings Bitcoin down. There's an evolutionary environment for cryptocurrency now, and Bitcoin or something like it will prevail somehow. It'll
We
even
need to kickstart the Honest Node project.
yeah. I mean, there's a lot of people that are trying to save Bitcoin, and there are other people that think that some altcoin is going to do it. It remains to be seen. I have this. I don't know. One of the things I think about when I see the price of Bitcoin going down is that people are suspecting that there's some fundamental problem with Bitcoin, and they're getting out of it into other alternatives. But it's impossible to tell.
Litecoin's a big hit, right? So Litecoin's not the alternative, clearly. They've shown less resilience to bounce back from the drop in Bitcoin did, right?
Right.
So I don't know what that other alternative
What
is.
about Ripple? What about Ripple?
Ripple is totally different animal. Ripple's protocol. It's not really focused on cryptocurrency.
You can trade anything with Ripple, right?
Yeah.
I mean,
That's right.
yeah, it's like more of a meta layer.
It is. It's an intermediary currency,
Right.
right? Like the U.S. dollar would serve the role in currency exchange between exotic currencies. That's what the XRP is.
Right.
But didn't Ripple effectively give themselves half the coins that will ever exist?
Yeah.
That's just bad PR from the people who are pissed off about Ripple. It's not a big deal. I mean, come on, it's no different than you starting a startup, and when you go IPO, you retain a portion of the shares for yourself. It's the same thing, exactly. And no, it isn't half.
How much is it?
It's a smaller amount. But don't forget the guy who started Ripple, who actually retained like 20% of it, then screwed off and started
Competing.
Stellar.
Yeah, it's the soap
So
opera.
it's not even within the Ripple network anymore.
If you've got the choice of a coin that hasn't been done and one where that has been done, I would certainly rather go with a coin where that hasn't been done.
Well, I mean,
they're
they'll
not
have
going to
to-
make themselves hugely rich.
But the Ripple's not about the coin. It's not about the coin. Ripple's a protocol. Ripple is an open source protocol for financial transactions. The XRP is merely a facilitating unit for the protocol. It's not about, we're not going out and investing and buying in Ripple to hold it for long-term gains. It's not what it's for.
But it has gone up in price significantly.
Second,
It has gone up in price significantly. I think they gave me a couple of XRP when I joined. And
yeah, that's right. The Ripple, the foundation behind Ripple, gives away XRP to help people get started with it.
Isn't the business model behind Ripple is retain some of those coins so that that's how they're going to make the money? So they're reliant on the value of XRP going up.
Theoretically, but Ripple is widely distributed. I mean, Ripple Labs is actually the only one that's really actively involved in developing Ripple. The founders of Ripple, one of the guys, he went off and did Stellar. He had like the lion's share of those XRP that were retained originally. He was the problem, and still remains to be the problem. But now he's got a contract in place with the Ripple Foundation that controls the disbursement of those XRP. We're hijacking the discussion.
Well, we are out of time. We can continue this at the bar. I think just to put a bow on it, it is, I think, interesting to think philosophically about money, about why Bitcoin was invented, about how well Bitcoin remains true to the original philosophy, and the original problems that Bitcoin aimed to solve. Those remain to be problems to this day. I think in our lifetime we're going to see the reconciliation of all the problems that the global financial system has wrought over our lifetime. And it's going to be Bitcoin or something like it that makes it a little easier on everybody. So philosophy is important. Rick?
Just 30 seconds, two really big pieces of news that happened today. I didn't get into the Bitcoins and Bali group until just a minute ago because I heard about them on a conference call, but I wasn't able to find anything on them online. Two huge pieces of regulation out of the U.S. today. The SEC and FinSec stuck up their little Hydra heads and lashed out. SEC has asked for information on several hundred counterparty companies for issuing unlicensed securities. Number two, FinSec has come down with their harshest ruling so far, ruling everybody's a money transfer company and has to be regulated. According to the people I was talking to earlier, who are insiders, they're already seeing a fleeing from the U.S. to overseas jurisdictions, both holdings and companies.
So these are
Anyone who's doing money transfer type businesses, which
as a
basically,
U.S. citizen.
wraps up a lot of the exchanges. They have to be regulated. Because
Fascinating.
As money transmitted. I just posted the links some Bitcoins in Bali. I don't want to.
Yeah, that's
you guys
well.
can read it there.
Yes. We check in with Bitcoins in Bali group. This is where we continue the discussion online. That sounds fascinating. Hopefully, we'll certainly be able to talk about it more next week. In the meantime, check out the Facebook group, yeah, we'll see you next time.
Yeah.
Thanks for coming, guys.
It does. Really brutal for counterpart.
Yeah, before you guys go, I've got just a few local announcements. We've got the Bali Bitcoin Binge, where we're going to take over the mansion out behind here for 2 weeks in December. Hopefully, we're going to get people in from out of town, but it's also open to locals as well. We're going to spend 2 weeks basically concentrating on Bitcoin. It's going to be lots of Bitcoin events, lots of facilitated discussions. There's lots of people from the local community involved, but we're also going to have people flying in for this. Begins on December 5th through the 19th. So stay tuned. We're gonna use the kind of the startup weekend model where we learn everyone's skills on the front, and everybody can kind of pitch their idea and get behind a certain project, and hopefully we'll have at least some prototypes at the end of that 2 weeks. So it should be fun. You can bring your Bitcoin ideas, and there will be people there that can maybe make it happen. So we're also planning on hosting the Bitcoin Film Festival in the middle of those 2 weeks, and I need help organizing this. If anyone's interested in helping me get this on the road, I've already exchanged a few notes with the person responsible for this, and he's interested in maybe even joining us for the film festival. So very exciting. Could be a really great day / night. And we're talking about, I think, on December 13th. So this could be like we could squeeze Bali in there right in between, right after Amsterdam. So let me know if you're interested in helping out with that. And please find all your friends who you'd like to introduce to Bitcoin. This is for absolute beginners. We get kind of lost in the weeds here. Sometimes it's not, we get together every Tuesday night, and sometimes it's a bit technical. This is for absolute beginners. If you go to bitcoinsinbali.org/Bitcoin101, you can register right on the website. It takes about 3 hours, but we set you up with a wallet, and we reimburse the fee, which is 200,000 rupiah, totally in Bitcoin. So essentially, the course is free. You show up with 200,000 rupiah, and you leave with a little bit of Bitcoin, and you know how to use it. So help us fill up this class. We do this every second Saturday here at Ubud. So thanks for listening, guys. Any other announcements? Okay.
Thanks, Gary.
Thanks, guys. Thanks for coming.
Thank you.